How do you decide between two similar investments? In this video, I'll show you how to analyze a mutual fund, and I'll compare two mutual funds live so you can see that it can be simple and easy to analyze an investment. And we're going to get started right now. How's it going, everybody, and welcome back to the channel. If it's your first time here, my name is Jay, and on this channel, I take my over 20 years of investing and finance experience and use it so I can help you get the most out of your money. And today's video is about how to analyze a mutual fund, or how to compare two different mutual funds, or just how to compare two investment choices that seem similar on the surface. And I'm excited for today's video because the topic for today's video came from one of you. One of my viewers, one of my followers on Instagram, handles right there if you want to give me a follow, slid into my DMs and asked me a question. And once I started looking into it and once I told them what I thought, I decided that this would make a great video. The situation was this person is working with a financial advisor. They're close to retirement, and the advisor was trying to get them to sell off a lot of their stock. And he gave them this mutual fund he wanted them to put all this money into. He wanted them to invest in this mutual fund. So they did what any good investor should do. They came to me, they asked me a question. They said, hey, I don't really know what I'm looking at here. My advisor wants me to invest in this fund. What do you think of it? So I took a look at the fund, and as I started going through the fund fact sheet and the details of the fund, things just started jumping out at me and sounding alarm bells and waving red flags and doing all the things, saying, wait, hold on. So I'm gonna show you exactly what I was looking at, exactly what I found, and then we're gonna compare that fund to another fund that is very similar on the surface, but once you dig into the details is much, much better. So I'll show you how to compare those things and decide for yourself now. Okay, so now we're looking at the mutual fund that this person, their financial advisor, wanted them to take their money and invest in. It's the JP Morgan Investor Balanced Fund. The ticker symbol is OGIAX. OGX. So let's take a look at this fund. I'll go through it, and maybe you guys can see if things stick out to you before I even say them. So we'll scroll down. Designed to deliver higher total return with a preservation of capital through an actively managed diversified portfolio, blah, 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 blah. I mentioned before this person is closer to retirement, so this is a balanced fund. It's aiming for a 50-50 mix of stocks and fixed income, bonds, money market, that kind of thing. So it's a very conservative fund. That kind of mix is right for someone very close to retirement. You want to focus more on preserving the money you've already made and invested throughout your career rather than getting max gains right now, because you don't have enough time left to weather any losses if the market drops and stuff like that. So this fund is looking for a 50-50 mix. There's nothing important down there. Now, the first thing I always do when looking at any mutual fund, looking at any ETF, look at the fees. So we click over here. JP Morgan makes it really easy here on their website. Click over to performance and fees. Really, on any mutual fund or ETF, or even stocks for that matter, past performance, don't even bother looking at it. As they say in every commercial, past performance does not predict future outcomes. So we're just gonna blow right past the past performance and go to the fees. Now the fees on this fund are 1.01%, net expenses 0.9%, and so 1% of an expense ratio on this fund, which right off the bat, that's a little higher than I like to see. You may remember from previous videos, the index ETFs I've pitched are like 0.005%, really, really low. So 1% expense ratio is high. So right off the bat, that's the first thing that jumped out at me at this fund is this person is paying a financial advisor probably somewhere around 1% of all the money they have invested. And then on top of that, the financial advisor just wants to throw them in a balanced fund here that charges a 1% expense ratio fees. So that's 2%, 2% right now. So the fees are high for my taste. And then the next thing, after we look at the fees that a fund or an ETF charges, let's look at what we're actually investing in. What does this mutual fund hold? So again, JP Morgan, really nice website, actually, I gotta give it to them. We click on portfolio, tells you the number of holdings in this fund is 28. So this mutual fund holds 28 different investments that make up this mutual fund. There's $4.83 billion in total fund assets. Now we get down to portfolio holdings, and this is the important thing. This shows us exactly what this JP Morgan Investor Balanced Fund invests in. So right off the bat, I'm gonna try not to say it, but what are you noticing here on our portfolio holdings? The top holding of this mutual fund is a core bond fund class R6. It makes up 21.6% of the total holdings of this mutual fund. Then we have a core plus bond fund class R6, makes up the next 9.6%. We have a US equity fund class R6 that makes up 8.8%. I don't know what class R6 stands for, by the way, so whatever. But what we can see right off the bat here, of the 28 investments that this mutual fund, this JP Morgan Investor Balanced Fund holds, it holds 28 different mutual funds. So this is a fund of funds. And why does that matter, you ask? Is that good or bad? Number one, I already went over, this fund is charging a 1% expense ratio. 1% is what I consider high in the grand scheme of things. It's not outrageous, it's tolerable. But when we look deeper here and we look at the holdings, we notice that this fund holds all these other funds. Let's just look at the first one, Core Bond Fund Class R6. I have that open right here. JP Morgan Core Bond Fund, ticker symbol JCBUX, share class R6. Again, I'm not exactly sure what that refers to, but because this is a mutual fund, it has its own expense ratio. So we come into here, this core bond fund has an expense ratio of 0.34%. Not too bad, not great, not too bad. Then let's go back to our balance fund, JP Morgan Investor Balance Fund. The next fund down the list is Core Plus Bond Fund, Class R6, makes up another 10% of the portfolio here. We look at the fees on the JP Morgan Core Plus Bond Fund, ticker symbol JCPUX. Gross expenses on this are 0.4%. Now you can see where I'm going with this. You look at the surface of this JP Morgan Investor Balance Fund, you look at, we'll go back, this performance and fees tab, you look, 1% expense ratio, that's not bad. But we dig a little deeper, it holds 28 other mutual funds that have their own expense ratio. So while that's not necessarily a direct cost, the expense ratio on each one of these 28 funds it holds, you're kind of paying on the back end because that's coming out of any returns that those are having. So you're kind of getting hit with some backdoor fees there because this is a fund that holds other funds which have their fees. On top of that, because this is a mutual fund that holds other mutual funds, every one of these 28 mutual funds that this investor balance fund holds, they may have to rebalance. They may be an actively managed fund where they have a fund manager, playing the market and moving things around all the time. So all those kind of things may have a fee associated with them in the fund, or the fund may have, distributions, or it may cause a taxable gains situation and things like that. All these, weird little scenarios that happen are going to cost you money, essentially, by investing in this fund. If you think of it, you hold an ETF or a mutual fund, you're paying the fees on everything that goes on in there. you're paying the fees on any distributions or rebalancings or things like that. Now you're holding a fund that holds 28 other ones, and all that kind of stuff just compounds and snowballs, and in the end just takes away from your ROI. So now let's look at another fund and go through the same exercise and see if it's better or worse than this JP Morgan Investor Balance Fund. So I'm gonna go to my tried and true favorite. I talk about him all the time on this channel, Vanguard. So let's go over to Vanguard. All right, so now here we are at Vanguard with the Vanguard Balanced Indexed Fund Admiral Shares, ticker symbol VBIAX, VBX. So right off the top, we got the summary. This index fund offers investors an easy, low-cost way to gain exposure to stocks and bonds. The fund invests in roughly 60% stocks and 40% bonds. So, slight difference between the two funds. They're both called balanced funds, where the JP Morgan Investor Balance Fund aimed for a 50-50 split between stocks and bonds, where the Vanguard Balance Fund aims for a 60-40 split between stocks and bonds. So that just goes to show you, just because two funds are named similarly and may have a similar strategy, how they implement that strategy and how they try to get you to where they're trying to go can be done different ways. Now, as far as the 50-50 mix or the 60-40 mix, both of those are perfectly fine for someone at a retirement age. They're both plenty conservative, but just goes to show you, you gotta look in and know what you're investing in. All right, so after that slight difference, obviously, again, the first thing we do was we look at the fees. So Vanguard has it right here on the overview page, expense ratio of 0.07%. Now let me click back in case you forgot. Performance and fees of this JP Morgan fund was 1.01%. So we got 1.01% compared to 0.07%. That may not seem like a lot, but when you're investing tens of thousands or hundreds of thousands of dollars, as you'll probably have when you're investing in these at your retirement age, that can add up to some damn big numbers. So right off the top, you can see the Vanguard is way ahead with their much, much, much lower expense ratio. But like we saw in that JP Morgan fund, I was concerned because it was a fund of funds, and that led to a lot of hidden expenses and fees that you normally wouldn't even think about. So let's take a look at what this Vanguard Balanced Fund invests in. Both JP Morgan and Vanguard, I gotta hand you, make it very easy to find out everything you want to know about their funds on their websites. So kudos to both JP Morgan and Vanguard there. So now we're looking at the holdings of this Vanguard Balanced Index Fund. Now, if you remember, the JP Morgan fund held 28 investments, and they were all mutual funds. Right off the top here, this Vanguard Balanced Index Fund, we're only on the stock tab, has 3,300 holdings. So that means as part of that 60-40 split in this fund, that 60% of stocks is made up by holding 3,300 different stocks. You can see the top stock it holds is Apple, then Microsoft, Amazon, Facebook, Alphabet, which is Google, Johnson & Johnson, Berkshire Hathaway, all the big names, all your S&P 500 large cap stocks right there. Let's see. Keep going down. We got MasterCard, Verizon, Disney, PayPal, Netflix, Pfizer, Walmart, everything you expect. I'm not going to go through all 3,300 stocks. You're welcome. So you can see it's not holding a mutual fund that holds all these stocks. This fund is actually holding those stocks. So you're not paying that extra expense fee on the secondary mutual fund that you're holding. There's no fees associated with just holding these stocks. So then let's see how this makes up its 40% of bonds. So we click the bond tab, and you can see it holds 7,721 different bonds. We have Federal National Mortgage Association, government, United States Treasury notes. Looks like a lot of different government bonds. A lot of Treasury notes in there. So again, This Vanguard Balanced Index Fund isn't holding bond funds to make up that bond portion of its holding. It's holding individual bonds. So again, you're missing out on all those fees and distributions and capital gains and things that might happen inside a mutual fund. And you're holding only one fund that's holding all the individual investments. So you're not getting backdoored by your fund the way you are with JP Morgan. So there you can see, comparing the JP Morgan Investor Balance Fund and the Vanguard Balanced Index Fund, you know, you say the names, oh, they're both balanced mutual funds. What's the difference? Well, you see Vanguard has an expense ratio that is a lot lower than the JP Morgan fund. When we look at their investments, again, the Vanguard fund is holding individual stocks, individual bonds, whereas the JP Morgan fund is holding a bunch of other mutual funds. So the expense ratio that they list is actually much higher because of the added expenses of those funds. So in this case, if my financial advisor was trying to tell me to put all my money in that JP Morgan Investor Balance Fund, I would tell him to take a hike. Thank you very much. I am not interested. I'd much rather prefer, this Vanguard fund, or I'm sure you could find other funds at JP Morgan that are better than that. So I hope this was helpful. I hope you learned something. I hope this helps you compare investments when you're doing your own due diligence, as we always say you gotta do. Take a look at these two videos over here. They will also help make you better with your money. Follow me on Instagram, like I mentioned before. Subscribe to the channel if you're not already. And please, if you enjoyed this video, give it a like down below, give it a thumbs up. It helps spread it to other people. I'll see you in the next one.